Hi traders, thanks very much for tuning in. I'm about to play you a short extract from a recent coaching video that I did with Charlie Burton. It's just one part of one episode of a series of videos that we're going to be doing, as well as actually a podcast series coming up soon where I'm going to get to pick the brains of Charlie over all sorts of things: technical, fundamental, macroeconomical, everything. And yeah, it'll be nice for someone like me without that sort of knowledge, more sort of technical based, to be able to see behind the curtains of what a qualified wealth manager and professional champion, even trader like Charlie, what he knows. So take a little look at this teaser, go and have a look at the actual full video, which I will link at the end and in the description. And obviously go and subscribe to Charlie's channel, because that's where all of these coaching videos are going to be. And yes, I hope that you enjoy the content, and I will catch you soon in one of my new update videos.
So you've got a target there. Can you talk us through a little bit of? It's about 122, is it? I can't quite make out.
Yeah. 122 500.
What does that relate to? This.
So yeah, good question. So if I zoom out onto the monthly, this is just an area that I've identified as being a key level.
Good.
I'm calling it a key level just because, sometimes it's support and sometimes it's resistance. But the main point is the market's watching it. It's the same as the moving averages for me. It's like people are watching it, and so you want to watch it as well. It's sort of a self-fulfilling prophecy, isn't it? Yeah. But yeah, so that's where my line is, essentially. It's bounced off that lot.
Now, what you'd said in your notes is if you take an entry, so the nice thing is that you've got a plan A and a plan B. So plan A is, okay, anywhere in this area, this zone that it's at, if it does something like a bullish engulfing candle, that will be your trigger. But of course, not every time do we get a bullish engulfing candle. So you've got a plan B that, okay, if it closes up through those moving averages that you'd identified using your 50, 100, 200 on the 4-hour chart, then that would then be an entry. Is that right?
Yep, that would be good enough for me.
Okay, good.
Let's just say you get like 3 bull candles going up through it. It shows quite good momentum. It's crossed through that. One thing that I hadn't thought about, but that you raised earlier, is that the moving average is currently on the 4-hour facing down, but I would imagine they would flatten out quite quickly, on especially the 50. So yeah, it will be interesting. I mean, that is exactly what I'm just monitoring for right now. Just sort of trying to sit on my hands and not get too.
So I'll ask a question. Let's say your trend line there, that this is on your 4-hour chart. So let's say the euro came down. Okay, it doesn't do an engulfing from here, and it doesn't go up through those moving averages. So I'm playing the what if game. So what if it came down to that trend line, which, looking at it, by the time it comes down to that trend line, it would almost be like a little mini double bottom there on the 4-hour chart. Would you do anything there? Would you look for anything at that point?
So you mean if it came down and bumped onto here?
Yeah.
Yeah. I think like at that point you're right up against one of these sort of unambiguous levels of where you can sort of take a trade at low risk. So I would definitely be looking for, again, a similar sort of situation. If it came down to here, I would imagine that the moving averages are all very tightly packed, because it's come down in this wedge and it's flattened out. So everything will be converging. So you've got all these places where you could individually take an add-in trade or start a trade against the moving average, against the 50, the 100, the 200, the trend line, the support and resistance line. All of these different places are all together, so it would be very hard to not want to get in and just wait for any sign. I would probably be looking on the daily at that point rather than the 4-hour, because it could be noise at that point. That's just me. Like, I feel like if it's flattened out to the point where it's here and everything is together, it's almost like I I could quite happily take a position long, but it's also likely that the MACD may have gone negative if it's reached, let's say we're on Tuesday next week and that's happened. And so it's,
yeah.
So then I'm sort of thinking, right, well, I want my stop loss to be the other side of this. So it might be that I want to just start looking at the daily for a bit, because I need a little bit more zoom out sort of perspective on where things are. Because the 4 hour for me is more a timeline that I would typically add in on. But given where the euro is right now, I do feel like on balance it's more of a long, and I am in the green territory, but as you can see, it is starting to slow down again. So it might change, and I would just have to respect my rules and not take a long.
Thank you for watching, guys. Don't forget to go and watch the whole episode. You can go and check out the full video on Charlie's channel. Link is in the description. And don't forget to hit subscribe if you enjoyed this content. And I'll see you in the next one.